Welcome everybody to the Chinchilla Pickin' Podcast. It is May the 4th. Be with you, 2025. It is 4:09 p.m. As always, we hope to be entertaining, educational, and uplifting because we want everyone to make money. My name is David Underwood, and I'm joined by the one and only Brandon Beaver. Brandon, are you a Jedi fan?
You missed my new nickname, which is the Rambo of capitalism.
I'm not gonna do that.
So no, I'm not a Jedi
You-
fan.
You're not a Star
But
Wars fan?
yeah, no,
Anything?
I don't really watch Star Wars at all. I do know that there's a movie that just came. I don't think it was Star Wars, but there's a Disney and Marvel movie that just came out, and I can't remember the name of it right now.
Thunderbolts.
Yeah, 76, was it billion dollars in revenue the first?
More than that, they are doing fantastic, but everyone knew it would. So if you talk to movie critics and movie fans, like I have a lot of friends who are movie fans and they go out of their way. They'll go watch a movie two, three times in a theater if it's really good. Everybody was excited for Thunderbolts. Everybody was excited to watch it and waiting for it to come out. There's a number of other movies coming out this year that people are excited about. The latest Mission Impossible one. That's the one where they went to space, possibly, maybe, or we're going to. I don't know. Tron Ares is another one that's coming out that people are very excited for. There's a whole bunch of them, but Thunderbolts is one people are waiting on edge for because people said at the beginning of the year they're like, yeah, that Disney movie junk, that Disney movie junk, that one junk, but this one, Thunderbolts, we want to see it and people were excited for it.
Yeah. So what's the Jedi news? Because that also was
May
Disney.
the 4th, man. May the
Oh,
4th be with you. Oh
okay.
my,
Same,
wow.
same thing. May the fourth be.
Seriously?
Yeah,
Wow.
yeah.
Wow, Brandon. Just
Well,
wow.
I used to party way too hard when I was in my earlier college years. So today, right now, to me, would be known as Cinco de Sunday.
Cinco de Mayo is tomorrow. That's
Whatever.
the 5th of May.
I'm just telling you, it'd be Cinco de Sunday. I'd be pre gaming for tomorrow.
Wow. Yes. Well, if you're a Star Wars fan, today's a big day. It's National Star Wars Day. We celebrate everything Star Wars. That's just where our society is at. We celebrate a movie uh, theme genre. I don't know what you want to call it. Is it its own genre now? Is it? Can we say that?
It's sci-fi,
Uh,
right? I
I
guess.
think
I
we
don't
could call it its
know.
own genre now.
Yeah.
Anyways, yes, May the 4th. Huge day for Star Wars fans. I'm sure Disney sells lots of merchandise leading up to this on this day. Lots of people go out and buy stuff for May the 4th. I know it's a fun day. People wear their Star Wars outfits. Go out there have some fun, man.
Sure.
No,
Yeah.
no, not you.
No.
Everybody but Brandon is
Good.
having fun.
I'll be watching American Gangster tonight, which is a Denzel film. Thumbs up. 2007, I think, is when it came out.
Yeah,
So
I've
it's been
seen
out a
it. It's a
while,
good
but
it's a
it's a
good
good one.
movie. I've seen it.
Yeah.
Yeah, I've
Girlfriend's
seen it.
never seen it, so I was like, you have to see this movie. It's a good one.
Make her watch Wall Street Money Never Sleeps. Love that movie. Or
Die
Wall
Hard's my
Street, the first
favorite.
one.
So no, I mean,
Too Big to Fail. Watch Too Big to Fail. That was a good one.
you know what bothers me about the Wall Street movies, though, and it is a good movie, but it is everything I hate about some people in the stock market world. So there's that.
Well, the first Wall Street movie in 1980, was it 9 when it was made?
Yeah, something like that.
He purposely, the director, if you watch the interviews, he purposely did that movie to really showcase like the fashion they did like a year behind on purpose. They didn't want it to be up to date fashion. They wanted it to be sort of out of date fashion. They purposely made some people arrogant and just unlikable, and they kind of kept that for the second one, sort of. They tried to make you like the main character, Shia LaBeouf, or what his character plays, but they still they make you not like him,
Yeah,
on purpose. There's a reason for that. So
yeah.
yeah. Anyways,
I don't think
people
a
don't
lot of
come to
those
listen to
people.
us talk
Yeah,
ramble on about this stuff. They want to hear us argue. They want to hear us talk. They want to hear us discuss stocks and investments, so you can get some good ideas of what's going on in the stock investment world. And that's part of our mission is to bring you the news, bring you to everything we know, and pass it on to you. Um, so before I get into rules, Well, actually, no. I could cover like two because I own two dividends, and I'll cover them, later on about Mo and Arc and Ares Capital and Altria later on. But that's gonna be real quick. That only take me a minute or two to tell you about where I'm at with them, why Altria is no longer a 10% paying dividend anymore right now. Well, I could just tell you real quick. The reason why Altria doesn't pay a 10% dividend, Brandon, is because
Mhm.
they had a 50% jump in stock price.
Yeah, that's right. Which
That
is,
would
I mean, it's the reason why Nike is a dividend stock now is because the stock's gone down in
Yeah,
price.
I mean, so everybody bought Altria. I like to think everybody bought Altria because I've been talking about it as a dividend stock hold. I own a lot of Altria, but I bought it at such a cheaper price than what's at now. A
Right.
lot of my shares were at the 38, 39, 40. I think I bought some more at 42, 43. And then it just kept going up, so I just kind of quit buying, but I hold a lot of it at that price range. So for
What,
me, it's
yeah,
it's great.
you're locked in with the
Yeah.
dividend percentage. And that's why a lot of these dividend paying stocks trade in ranges
Yeah.
because the dividend provides a bottom, but then it also kind of provides a top too, because once the stock goes so far up, if they don't raise their dividend payouts to the company, then the dividend payouts for people who buy at the top become less of a percentage of their investment.
Yeah, it's at $59 a share now. I mean, like, it's a great dividend, 6.82%. But I mean, I'm not buying it for that anymore at that price range.
Right.
Yeah. So, anyways, rules, rules, rules. Brandon and I get together 5 to 10 minutes before the show and we tell each other what we're going to talk about. Here to live back and forth, the bicker and the banter right here on the show for you. Brandon, take it away.
All right, guys, we just had a scare. The GDP numbers came in negative. It was a contraction of 0.3%. But here is why, first of all, the GDP, the way that this is calculated is 100% outdated. And it only tells a portion of the story, right? So if you look at how GDP is calculated, it's consumption plus investment plus government spending, um, and then subtract imports or exports and imports. So actually, you subtract the exports and imports first. So subtract exports from imports and then add consumption, investment, and government spending. So the problem with that is that a bunch of businesses in our economy started to try to pre-react to the possible tariffs that were coming up in April. They front-loaded all of their shipments from other countries. So our imports almost, I mean, they went up exponentially last quarter. The imports did.
And you subtract imports from the GDP number. So
Yes.
if I were to
To,
start with,
to,
let's just say a 1%, but I had 2% of our national, I mean, of imports, then it would be a negative 1%.
yes. So everybody
To
trying to
simplify the
front,
math. Yeah.
right. So everybody trying to front load these tariffs, especially, and China imported a lot more than they normally would, and that caused the GDP number to contract. A lot of economists are saying the underlying actual economy probably grew around 3%.
Well, yeah, I mean, and also government spending decrease in Q1, and that also goes into account for the GDP number. So you got to take into account, decrease in government spending, a surge in imports coming in there, and I mean, the GDP number was low to begin with. In
Right.
Q4, it was 2.4%.
Right. So, I mean, this doesn't really account very well for jobs like mine that are created by imports. I don't actually like manufacture anything, right? I do all my work on the computer, all my work typing every day, doing schedules and trying to figure out, um, who I should send where for what repairs and things like that. In the crane industry is where I work. So
Something
that's
that
not,
AI
there's
can
not
do
really, I
very
mean, like,
easily.
there's an investment in me as labor that's kind of included in this. But like a lot of those imports that are creating jobs like mine, basically what I'm trying to say is we're not in recession. The economy right now seems fine. And what kind of made me think this way, right, was a first quarter contraction in GDP, and everybody started blaming tariffs. And I'm like, wait a minute, the tariffs weren't even announced until like 2 days into the second quarter. Something else had to be the reason other than the actual tariffs. And it just happened to be people front loading the tariffs and importing a lot, causing the GDP numbers to be skewed. In fact, if you look at the overall economy, S&P, the S&P 500, for example, um, it reported double-digit earnings growth so far for the second consecutive quarter, with blended earnings rate of around 10.1% growth year over year for the S&P 500. That's earnings growth. That's an improvement actually from last year where we had 7% growth rate. And another thing that's encouraging is quarter one 2025 S&P 5 earnings per share are on track to rise 11.4%. There's nothing about that to me that screams recession. That's the opposite. So
Yeah.
even if you're in my corner and saying that tariffs could very well cause a recession, this has not happened yet. We're not there.
Yeah. Yeah, we haven't seen the effect of if I mean if you honestly believe that the tariffs are going to cause the economy to grind to a halt and go negative, it it won't happen that quickly.
Right.
If you honestly, sincerely believe that that is going to be a decline, you will probably start seeing it in September, is what I want to say, from tariffs that were enacted in April.
Well, certain sectors might see it faster. Maybe agriculture because they're directly affected by wheat and soybeans and stuff like that. That um, China was the biggest importer of for us. So that might happen quicker, but through the overall economy, you're right. That's going to take
Which,
time to go through.
yeah, okay, I'm not a farmer, and I don't understand. I'll be honest, I'm not that knowledgeable when it comes to agriculture and how it flows from the United States and in and out and where we get it from and why. But like to me, it makes no sense that our farmers are selling so much out and we're shipping so much in. Why don't our farmers just sell in? I don't understand that. And am I missing something?
Well, I mean, there's
This is not as strong. This is by far the probably the one of the weakest sectors of the economy as far as my knowledge goes.
a
So I don't
billion.
understand that.
I mean, but there's a billion people in China versus 300 million people here. So probably the volume of shipments to China are much greater than what the volume of what they could sell and even their consumer base here in the United States.
Well, that even further proves my point that I'm making with this statement,
I,
Brandon,
I don't
is
know.
that like we should not have any food issues because our farmers here produce more than enough for our country. So I mean, we even dump excess food into the ocean in some areas of the United States, and it's like, okay, so we should never have to worry about food because United States farmers produce so much. Why are we importing food?
You know what? Here's the thing, and I said this on the text. I said this on the tech and the group text because Nick kind of said the same thing, right?
Yeah,
And this
Nick
is one
Young,
of the reasons
fellow contributor. Yep.
why I'm against central planning as a whole is that I don't think any one person could know all of these details. All of these different transactions have different reasons behind them, oftentimes. And so for a billion, people buying soybeans from China, there's like a billion different reasons as to why they're doing that. And if there's not enough people here in the United States purchasing it, however many people aren't buying it, they've got all their different reasons for it. Maybe they don't like soybean based products. I mean, there's all different reasons why these things happen and all different reasons why costs are different. And it's very difficult for one person or even one political party to try to figure those things out and steer demand in a healthy way. That's why the free market is the greatest. Let people make their own decisions for their own reasons.
If it's free market, true free market.
Yeah. Okay. I'm going to skip
So
over the tariff debate because we've already gone through it.
I'll,
But
let's move forward. Let's move forward.
we agree on this that we're not in a recession. Six of 11 sectors showed year over year growth, led by healthcare, communication services, information technology, utilities. Five sectors, led by energy, experiencing declines. And there's whole different other reasons for energy is declining that are not recessionary that you're going to get into, I think, later in this
Yes,
podcast.
100%. I'm going to get into that and cover that.
And in fact, energy declining is probably going to lead to at least a little bit of a temporary or maybe even midterm boost to the rest of the economy, probably, especially freight and rail. So we're not in a recession yet, guys. I don't think so, at least. I mean, maybe time will prove me wrong, but to me, this just looks like this is skewed based on one-time events that are going to level out, probably sooner rather than later.
I agree. I agree. And I like the way you explained it and broke it down and covered the different areas of the economy and whether or not they're growing, not growing, and where we're at. Yeah, the GDP number. I mean, I just leave it as it is.
Yeah.
I'm not gonna. I didn't even want to bring it up. I was just gonna glaze over that, just because 0.3% is basically flat, and there was just so much. I mean, there's when so the that Department of Government Efficiency, they actually so they have all these excess spending that quote unquote that they found, and they want to cut over $1 trillion worth. But what were they actually able to cut was, I think they said something like six, was it 600 billion or 250 billion? It was a lot of billions that they were actually able to cut without any Congress or any other approval, and that has a big effect on the
Yeah,
economy when you cut out that
it
much
does.
government spending.
It does.
So I mean, I mean that, and everybody pre-ordering imports so they could stock up. Yeah, that has a big effect as well.
You know, the government spending cuts that come sometimes dramatically like that. They have a short-term shock on the economy, but overall, it's better for the long term, in my opinion.
Yeah, and you and I have talked about QE and quantitative easing, which started after the 2008 recession. And we can argue back and forth whether or not that was needed. But we moved to quantitative tightening at one point,
Yeah.
and we were starting to unload all these bonds, mortgage bonds, and bond treasuries that the United States owned, and they were trying to sell them off and put them back all on the market and unload it off the government's portfolio, because the government shouldn't have a portfolio of that. Uh, but then they paused,
Hmm.
and we want more quantitative tightening, because if you don't know what I mean by quantitative tightening, if you're listening, like, I have no idea what Dave is talking about right now. So a treasury bond is what the United States government does when it needs money to pay for stuff. So let's say the government needs to pay for its military, that's whatever, right? They sell bonds. So they'll sell $20 billion worth of bonds, and they'll pay back at the interest of, I don't know, let's just say 4%, right? Because it's moot to the point I'm making. So 20 billion bond, 4% annual interest. They sell that. Well, the problem was U.S. government was buying its own bonds and
Yeah,
just
the
holding it.
treasuries, which I think they're going to do again, but we'll see.
Yeah, which is they're just printing your way. I mean, that's not even printing money. I mean, at this point, like, I don't even know what you, how do you make that math when if you're trying to run a government of any kind?
Yeah.
It was blowing my mind, and it was to the tune of, so they were buying mortgages that banks have put together in packages, so mortgage bonds, and then they were buying treasury bonds at a tune of $120 billion a month, is what we were reporting on this show just a few years ago. And then they quit and they went to quantitative tightening, which Brandon and I both agreed is necessary. And, then they paused that. So
So let me defend myself because that was happening when I told everybody that bonds were dead. And at that
that
time,
was,
they
yes, yeah.
were. It made no sense to buy bonds when the U.S. government was buying up $120 billion in treasuries every month or whatever. What you said it was every month, right?
Yeah, it was
Yeah.
mortgages and treasuries.
Yeah.
So a
So, but
combination of both.
when they're eating up all those treasuries, what it's doing is driving interest rates down. And we were facing inflationary environment that wound up being like 9% at one point, and you were getting like 1%, 2% on the yields. You were
Yeah.
losing money to buy treasuries at the point. Those bonds were dead, and they're even more dead now that interest rates have went up. So now I am an owner of treasuries, because
Are
I
you?
think
Did
that,
you? Okay.
yeah, so now I think that the US government at some point they see demand softening and things, and I think it's going to probably come because of tariffs, but that's a whole different story. They've got more than enough room to go back into quantitative easing, which you and I agree is a mistake, but I think they're going to do it.
I hope not.
But if they do, then my bonds that I bought at 4.5 for 4.3% interest are going to become worth, they're going to be more valuable in the secondary market because interest rates will drop. So if I want to sell them back to the secondary market for a better price than what I bought them for, then I'll be able to do that. Or if I want to just sit and wait and get my principal back and interest and all that good stuff, I could do that as well. So it provided me some options. But yeah, I do think, and that's kind of the other reason too why I'm not in so much of a panic right now. I don't like government bailouts, but I think it'll happen if we go into a recession anyways. And the Federal Reserve has more than enough room right now to move on interest rates if they have to and lower
Yes.
them.
Yeah, they do have room to make some moves there.
And quantitative easing if
Yep.
needed, which I don't
Let
like.
let's transition over to some earnings because I know you had some briefly cover a couple companies here, and I know I have some comments about a couple of them. Does any of them start with A? Because there was a few big ones that
Yes.
started with A this past
Yeah.
week.
So Apple right now, fiscal 2025, quarter one. They posted a revenue of $95.4 billion. Actually, that was for the entire fiscal year. That's up 5% year over year.
$95 billion.
$95 billion, 5% increase. Margin was 47.1%, which was good. Um, about
Was that
100.
gross or net margin?
That was gross. Um,
Gross margin of 41%.
yeah, well, that's good. I like above 40 for the gross margin. Um, I don't know about Apple, right? I went a little bit and I bought a little bit of it last week. But with a price to earnings share around 20-25%, a lot of people are saying that it deserves a higher multiple because of artificial intelligence. But don't expect Apple to be a product originator in this category. They're going to wait for somebody else to come out with all of the products and then they're going to step in and try to perfect them afterwards.
Yeah, and that's what
So,
Apple has done consistently throughout time with all their products. And
right,
and they're very good at it and they have a great marketing team.
right. Morningstar is expecting an earnings per share projection of $8.52.
So
For the
can I say something here about
yeah,
Apple's
yeah.
guidance and what they said? They took what was it a 900 they're saying that they're going to take a $900 million hit due to tariffs if they stay in place. But they pull in $94 billion a year revenue. So that's a 1% hit to the revenue, and people sold the stock off by more than 1% due to a 1% hit to top line.
Yeah, but I also think that, I mean, the guidance right now is for earnings per share to grow in the high single digits. So for me, if you're looking at a price to earnings ratio, I think it's around 20 right now. That might maybe even a little bit overvalued for a company that's now looking, in my opinion, to be mature.
They've been
So,
mature for a while.
yeah, but I mean, like the growth there is, I don't, I don't, I don't think that this deserves a higher multiple than where it's at right now, in my opinion. I
The
think that it's,
multiple is
yeah,
based off of numbers, though,
yeah, it's
isn't it? Am
based
I
on
wrong?
earnings. It's based on earnings, but earnings growth is muted compared to where it was 5, 6 years ago. I'm not going to make a bet on something I don't know. I know the iPhone 16's got new artificial intelligence capabilities. And I know the 5G cycle is coming around, which is supposed to be huge for Apple. But if you're still guiding for a high single digit earning per share growth, I don't know that this deserves to go higher from where it's at right now.
Hmm.
Unless you're betting on new products, but again, that's, Apple lags behind everybody else in innovation. They just catch up and then do better.
they catch up and they I don't even know if I call it do better. I would say they make it look nice and they have a great marketing team is how I would put it.
Yeah.
Because I feel like other companies do it better, but they don't make it as shiny and they don't have as good marketing team.
Yeah. And now everybody that's bet against Apple has been wrong. So there's that. So I do own it. I'm just not, I'm a little underweight on it. Did you see, you watched a little bit of the Berkshire Hathaway conference, right? Shareholder
Yeah,
meeting?
I did, and I do. Before we get to Berkshire and what
Well,
Warren said, I mean, unless you want to go ahead, cover what
yeah,
Warren.
no, I just wanted to say that, like, I don't know if you saw him introduce Tim Cook, where he said, "Here's a man that I'm embarrassed to say has made more money for Berkshire Hathaway than I have." That's what Warren Buffett said.
Yeah, and yeah, that's a good line. Yeah, Apple has made Berkshire quite a lot of money, but my I want to bring this back to they're moving because of a $900 million hit, possibly to top line revenue number. They're trying to move a lot of their suppliers to India now and Vietnam and away from China.
Sorry, $95.4 billion. I need to read my notes better. That's for one quarter.
That is for one quarter.
That's
See,
quarter one.
so a $900 million hit. I mean, come on. This is they're going to
Pocket
spend
change.
more than that. They're going to spend more than that moving everything to India and Vietnam.
Yeah, that's what I, and that's kind of the other thing I wanted to bring up, moving everything to India and Vietnam, which they started a couple of years ago, by the way. This isn't new. This is
Yeah,
some,
yeah. They
they're going to
didn't just
speed
do
it
it
up.
this year. Yeah, they did
And
not just do this year.
right. And they're also going to bring a manufacturing facility here to the United States in Texas now. They announced this back in February. And there's a problem here in the United States where we're not really trained to manufacture semiconductor chips and electronics, but they're actually going to open up a factory, or not a factory, but a school in Michigan. Apple's going to open up a manufacturing school in Michigan.
Yeah, and
So,
we need to learn more about how to create the semiconductors here. We don't need the majority of our industry here. It's just we need part of it. And the reason in that we found this out, again, I go back to this. I started mentioning this last week on our podcast was COVID highlighted a lot of the areas where we're dependent upon other countries and we're dependent upon some countries that we don't have a great relationship with and we're dependent upon them to create our our chips and stuff that we use in military and other areas of the industry. And this is part of the reason that we started to, all right, we need to put some factories here. We need some manufacturing here. Maybe not all of it, but we need some because what if COVID happens again? We need to be able to produce enough here to feed our economy and so forth.
okay. I hope it doesn't happen again. I mean, that seems like to me that's like kind of like the Great Depression, like a once in a lifetime thing, and I hope I hope I'm right.
Well, they highlighted part of the reason because what if our relations with China go even colder?
You know, you know what Jon Stewart from The Daily Show said
What do
about
you
how
say?
he said the world is probably going to end after some scientist in a lab says, "Hey, it worked."
That's good. That's good. Yeah. So
So,
Apple, I'm not buying. I have bought it before. I've owned it before. I'm not buying right now. There's a. I feel like there's just too many headwinds for Apple, but I've been wrong. I've been wrong on Apple so much.
yeah,
I can't ever call Apple right. So I just stay away from it because I can't call it right. So I'm just like, I'm not
yeah.
buying.
I don't. So I did because of that reason, and I would expect it to be in line with the market probably over the long term here, but I don't think it's just screaming by, which is why I didn't go even equal weight on it. Um, and then the other things that you were bringing up, it's going to cost a lot of money to move those factories to India and bring factories over here to the United States. That's going to be a hit on earnings per share that I'm not sure is necessarily factored in yet. One of the things that I loved about Meta when they decided to start spending $10 billion on reality labs every year is they told us they were going to do it right away.
Yeah.
It was immediate, and so people started, doing the math and figuring out what the hit on earnings per share was going to be. Right now, at this moment in time, we don't yet know what the cost to Apple is going to be to move those factories. And they've got plenty of money to do it, but we can't really adjust our forecast for earnings per share based on those numbers because we
They
don't
have,
have
yeah,
them.
they have the cash on hand. They could pay cash for it.
Yeah. Yeah, but
They
that
have the
still comes
cash
out
on
of
hand.
it still comes out of shareholders' equity,
Yeah.
essentially, in the end. Um,
And India
so
is right now in the border, still in the hostilities between them and Pakistan have jumped up recently too. Have you been seeing that on the news reports?
yeah, that's always a constant thing that's been going on for decades back and
Yeah,
forth.
yeah, this has been going on for over 100 years, but like, or not 100 years. They haven't made that
Uh,
separation hasn't happened 100 years.
yeah,
But it's been going on for a long time, and so, and if you're listening, you're like, what is Dave talking about? That separation hasn't happened. So India and Pakistan used to be one country, India, and then they split into India and Pakistan, and they split mainly along religious lines, and it became Hindu and Muslim, and they were just one country at one point. They split, and they've been having the consistent border skirmishes in the mountains along the border there ever since they
yeah,
split, and it's
and
been a
that's
constant issue.
and then something that complicates that is that Pakistan has nuclear weapons.
Yeah, and India does too. They both
Yeah,
do. So it's always a tense situation there. So
yeah. Always geopolitical uncertainties in Asia, it seems like.
right.
And no fun.
Anyways, Apple, I'm not buying.
I bought a little bit.
There you go.
Uh, Not nothing to really move the needle. Um,
Talking about moving the needle, where are we up to next?
I want to look at Union Pacific.
Let's do
Um,
that.
I was kind of looking at freight and rail earnings just to get a hold of what I thought, where we were going with the entirety of the economy. I wanted to hear some comments about those things, and I did get some comments about them. I'll get into those in a second. I started looking at Union Pacific, and I was like, dude, they got like a huge profit margin. I think the gross profit margin for Union Pacific is somewhere around like 80%, which is insane because it's a rail company and it's very capital intensive. The return on equity was 42%.
Oh,
That's amazing
nice.
numbers right there, right? But I want to kind of take you through. I'm not buying Union Pacific, but I'm going to take you through what I saw to get me to that point. Um, for the earnings, net income and earnings per share, they posted a net income of approximately $1.6 billion for the first quarter. Earnings per share came in at $2.70. Um, Performance nearly flat. So they had about flat revenue, flat earnings per share. Earnings per share missed by a couple percentage points. They noted that they included a 7% headwind from fuel uncertainties, which kind of caught me off guard. For those of you who don't know, most railways actually run on diesel fuel. But we've been covering this, the drop in gas prices, right?
Yeah,
So, what this is, the drop in gas prices made it so that Union Pacific could no longer charge fuel surcharges to their customer base.
ah,
Because fuel actually went down, they don't have those fuel surcharges. But I think that's probably temporary. If we can continue cheap fuel, there's no fuel surcharges for them to charge, but at the same time, common sense would tell us that might allow them to up their capacity and up the volume of shipments via rail. So that could actually wind up being a tailwind from them. Operating revenue came in about $6 billion. That's flat, but I mean, the fundamentals here look good to me until I looked at the depth, because you always need to check the depth, especially with railroads. Railroads are very high capital expenditures. Um, so if you look at the debt to equity ratio here, that's long-term debt divided by total capital. They got a 190.88% debt to equity ratio. That means that they have 190.88% long-term debt more than they actually have capital on hand.
that's a big number.
Yeah. The current ratio which is calculated by dividing current assets by current liabilities, is at 0.73, which indicates that at this point in time, Union Pacific's current liabilities exceed its current assets. So what does this mean? I went and I actually compared this to their peers, and I did not write down the numbers, but I can tell you just off the, from looking at it, this is, like I said, it's a capital intensive industry that requires constant reinvestment to, keep the railways active and safe and all of that good stuff. But these numbers, in a lot of cases, were substantially higher than their peers.
Gotcha.
Union Pacific has a very aggressive spending model that they've gone through. Historically, they're consistently reinvesting, which is good. And it seems to be so far working out because the return on equity is pretty big. Um, but when you run the numbers, some analysts are even saying they got a 10% of bankruptcy, even in current market conditions. So if a recession hits, it's going to be worse for them than it will be most of their peers. So this is why I'm staying away from them. They've got to get this debt down
Yeah.
before I would go in and buy it.
Yeah. If you're worried about tariffs and a recession, sell.
Yeah, agree.
Yeah.
I
So,
would be I would be looking more if you're going to go into rail, maybe more CSX, even Berkshire with BNSF.
yeah. That's all. That's what was going to come out of my mouth next. But yeah.
Yeah, more conservative style of accounting and business practices would be better. And for me, if we do go into recession, my first sign to going into rail would be the Federal Reserve starts lowering interest rates, signaling a new bull market to come. And that's usually kind of like where the bottom is at the market when the Federal Reserve says they're going to lower interest rates, and then businesses start opening their wallets back up again. Then you're going to see more freight. So
Yep.
interesting
Very
too.
good.
And it'd just be real quick about this one. Old Dominion, I listened to a little bit of their conference call. The CEO said that their results reflected ongoing softness in the domestic economy. And he didn't say in rail, he just said in the overall economy.
Ongoing softness. Maybe it's
Ongoing.
ongoing softness with Old Dominion.
And that's what I'm thinking too. I mean, freight has been pretty bad for about 2 years.
Freight's been bad for a number of years. You had the whole yellow carrier fiasco that went down. You had a lot of LTLs consolidate in the LTL industry. You've seen a lot of changes overall.
Yeah, maybe it's
Overall.
just not the industry to be in yet.
Well, that and yeah, so there's a big player out there in the American industry that is private and doesn't release their numbers, and that's Estes. And a lot of people just forget about Estes because they are private and they're not a public company. They don't release their numbers out there, and they forget that that's a big, huge national, international carrier, and they do a lot of business. So,
Is it an asset? So it is a carrier. It's asset backed. They own their own trucks and all that stuff.
yep, yep.
Okay. And there's benefits and you know with these carriers, the fuel costs going lower should be good, but at the same time, parts and trucks, probably trucking pricing is probably going to go up with tariffs and stuff like that too. So that's all going to
If
balance
if
out.
if the tariffs stay in place, which I don't believe they will, but
I hope
yeah.
not.
Let's go into oil. We've talked about energy and fuel costs, and we've alluded to the fact I'm gonna dig into this. So let's dig into it. What do you say, Brandon?
Sure, let's go.
All right, so let's start off with the bigger picture here. Oil prices have come down. Why have they come down? Well, one of the reasons they've come down is that OPEC has been pumping out more oil. So you go to an article that came out just this morning at 11:55 a.m. on the Reuters Newswire. The headline reads exclusive OPEC Plus to further speed up oil output hikes. So this goes back to if you read the whole article, which I recommend reading if you want to know what's going on. Back in 2022, OPEC said they were going to go ahead and cut oil and really just cut outputs dramatically across the board. Well, then OPEC has recently come out just a few months ago and said, "Hey, we're going to go ahead and start pumping more out into the economies of the world. We're going to start pumping out two more billion barrels per day." Starting soon, and it's going to be done by the end of June. And these are going to go into effect, and there's going to be a lot more oil coming out. Well, you may not know some of the reasoning behind this, right? So let me read some of this article, and it will give you a an idea of what's going on in OPEC Plus. So OPEC Plus will accelerate oil output hikes and could bring back the market as much as 2.2 million barrels per day by November, actually by June, if you start looking into everything and start researching this. Five OPEC Plus sources said the group's leader, Saudi Arabia, seeks to punish some of the fellow members for producing above the quotas. So OPEC back in 2022 had an agreement that everybody would stay at X amount of quotas, and that limits what some countries can bring in as far as revenue. And some countries have to look after their own, and so it creates problems in OPEC Plus, and there's problems in OPEC Plus right now. So the de facto leader, Saudi Arabia, designed a move to punish Iraq and Kazakhstan for poor compliance with production quotas. They signaled it was unwilling to prop up the market any longer. And so basically, they're going to go ahead and say we can start pumping out more, and it's going to cause the price of oil to drop, and that is what has happened. OPEC Plus includes countries from OPEC and allies such as Russia. They agreed back in the day to cut by almost 5 million barrels per day, or 5% of global demand. That was agreed upon in 2022. So now in December, they said that they're going to slowly start phasing out 2.2 million of that by the end of September 2026. Well, earlier this year, they said, no, we're going to move that up. And then they moved it up again. So now it's going to happen by June. And this has all to do with infighting, because Kazakhstan is not wanting to do what Saudi Arabia wants them to do. Kazakhstan defied OPEC Plus last month when its energy minister said, quote unquote, he will prioritize national interests over those of the OPEC Plus group when deciding on oil production levels. Kazakhstan's April oil output exceeded its OPEC Plus quota despite a 3% fall overall. OPEC oil prices fell to a 4-year low in April, all the way down to below $60 per barrel on accelerated hikes. And Trump tariffs raised concerns about a global slowdown, which has not happened yet, but the hikes have begun happening. Brandon, first thoughts before I get into more about Kazakhstan and Iraq going on here.
What I wonder what we can do about this with our investments.
So if you bought Exxon or Chevron or one of these oil companies recently, I'm afraid you're going to see more of a downturn in their share price because oil prices are going to drop even
Yeah,
more.
yeah.
And that's really what's gonna happen because of this. So if I go on to let's go into Kazakhstan here some more. So oil, this came out in Reuters Newswire back in April of this year. And the headline was Kazakhstan's oil output down in early April. The ministry says it's still above the OPEC Plus quota. So they were continuing for months and months to produce far above what OPEC wanted them to produce. They fell the first few weeks of April. They were down 3% in what they were putting out, but it was still high above what they want. The Central Asian countries' crude production, excluding gas condensate, was down 3% in April. The March average was about 1.82 million barrels per day due to a decrease at a Chevron-led Tengiz field, the source said. So Chevron is the main producer here in question in Kazakhstan, but it's Kazakhstan that is telling Chevron what to do here in their country, right? The energy ministry confirmed the scale to drop, but did not provide specific figures. Declined to comment. Kazakhstan goes on to say this has to do with more of the oil pipeline that's continuing to get attacked by the Russia-Ukraine war that's happening there, that's affecting it, which are trying to produce more oil to offset some of this that they're losing there. A production boost at the Chevron-led Tengiz oil field, Kazakhstan's largest, has been the main contributor to the country's overall increase in oil output. Right? There's a lot of Western oil majors, Chevron, Shell, Exxon, Total Energies, and ENI that are active in Kazakhstan, but the one is the Chevron oil field is the one that's apparently causing all the issues here. Um, they face the challenges in exploring the oil because they have the oil pipeline, but they're a landlocked country, so they can't just ship it out. So they have to go through these pipelines. But because of the Russian-Ukraine war, they're having issues here. Kazakhstan, if you don't know where it's located in between Russia and China. So it has two countries that it's located in between. It's as a huge landmass and compared to the population, only 20 million people, and oil is its main driver. Oil and minerals and mining, uranium are its main drivers of GDP and income in Kazakhstan.
Okay. Well,
Um,
seems like it's
go
going to be good news for us in the long term. Something that'll at least mitigate energy inflation and help with costs for the American consumers and maybe even globally.
right. Hopefully so. Um, right now, I'm gonna stall because my notes is freezing and I can't get to the rest of my notes
Well,
here.
well, I think
Right?
that I mean I think it sounds like actually it's good news for us.
It's very good news for us. It's bad news for Chevron in the area, but I believe this is a small portion of Chevron's actual oil globally of where they're located. So if you're going to short anybody, you're going to short Chevron. You're going to be bullish on the case that gas is going to remain cheaper for longer in the United States and other countries, and you're going to be watching more of the Russia-Ukraine war. I mean, if you're selling, if you're doing like a put on Chevron right now, due to some of these issues, and Kazakhstan is saying they're going to cut. Chevron's going to make less money because they have to cut in that field. You're also going to pay attention to the pipelines that are consistently being attacked by drones, because that's a big driver of this. Kazakhstan has nothing to do with the war that I'm aware of between Russia and Ukraine, but yet they're feeling the monetary effects, the economic effects of this war that's going on there.
Yeah.
The IMF, if you don't know what that is, the International Monetary Fund, they revised their economic growth projections for Kazakhstan. So they raised them actually previous estimates. So Kazakhstan is expecting their GDP to continue to grow all the way until 2030. They expect to almost double it by then. This is Kazakhstan. They're taking their oil money and they're reinvesting in other areas. They would like to be a tech country, and they're trying to grow their population to be more tech centric in education and infrastructure, trying to do more rail and more getting between city to city in Kazakhstan. That's where they're inputting the money. That's why they started producing more oil and exporting more oil in a way to pay for all this. They also wanted to become less dependent upon oil themselves. They want to become more environmentally friendly and less on oil, quote unquote, from their actual government saying this. So they don't want to be dependent upon oil, but yet they want to continue to sell it at a high rate so that they can pay for all these projects that they want to do.
I wonder how hands-on their government is with their market. Are they
Very
more
hands on.
okay? So they're not
Very. It's not a free capitalistic market.
so they're
It,
not going
it-
to do that well in the long term.
but
That's
in their plan is to become more private sector oriented.
oh okay. Hopefully they
But
get that.
they're doing that by having a government run energy ministry that is taking oil money and pumping it into the private sector. Do you see what I'm saying? So it's going to be
Yeah.
funded by government money, and they're hoping that it will jump up and take over on its own and become its own
So
entity.
fund okay, so funded okay, so uninvestable.
Yes.
in my opinion.
Yes. But all this to say that they're going to continue having their disagreements of OPEC. And because of that, Saudi Arabia is just going to flood the market and drive the price down to punish everybody because if they're selling it at a cheaper price, they make less money. But Saudi Arabia doesn't care because they have so much oil, they can do this. And this infighting in OPEC is going to continue. Is the whole point of all of this? Kazakhstan has no plans to stop. Really, they say they are, but then they're not. Iraq doesn't have plans to stop. If you look into that same situations, they say they are, but they're not. And so they're going to continue this infighting for the short term. By short term, I mean the next 6 to 9 months, you're going to continue to have oil
Okay.
prices suppressed, and you're going to see a hit to Chevron on their stock price, Exxon probably as well on their stock
And
price.
that's a good thing because that's more money in the consumer's pockets. It's bad if you work in the oil industry, but it's good for everybody else. So I'm
Right?
happy. I'm
Agree.
happy for that. And also, if we do get into a situation where the Federal Reserve needs to lower interest rates, it gives them more room to lower because it'll keep cost inflations down. So,
Right.
yep, good.
So one last thing I want to talk about oil, and this is a merger that was floated around, rumor mill, if you will. But I want to read from this headline, this news story that came out. It came out yesterday, Saturday, 5/3/2025 at 6:45, 6:44, 6:54 p.m. If I could talk, it'd be nice. 6:54 p.m. The headline reads: Shell is studying merits of buying BP. Bloomberg News reports. Bloomberg reported this yesterday. Uh, the Reuters news story is worded like this: It's Shell is working with advisors to evaluate the potential acquisition of rival BP. Though it is waiting for further stock and oil price declines before deciding whether or not to pursue a bid, which is going to happen based on the story I just presented, right? So we
Mhm.
just talked about oil prices are going to continue to decline. Shell is waiting for more declines in order to bid for this. So for several years, BP and Shell were almost equal in size. But over the past few years, Shell has grown to almost twice the size of BP, with a market value of 149 billion pounds. On Friday, when asked about a possible takeover bid for BP, Shell's chief executive, Wael Sawan, I know I'm not pronouncing that correct, but that's the best I can do, told the Financial Times, which I love the Financial Times, by the way, he would rather buy back more Shell stock versus a BP acquisition. A Shell spokesperson confirmed the comments. So it was confirmed by two different people that Shell would currently rather buy back more stock than purchase BP. When asked on an earnings call about Shell's capacity to launch a sizable acquisitions, quote unquote, he said, "We have to have our own house in order. More work to do." End quote.
That's
So
what he said.
that is what the chief executive of Shell said. That's his quote. So they're looking more in-house, wanting to buy back more stock, clean up some more things, get their numbers in line before they go ahead and make a bid for the rival BP. However, a takeover of crosstown London rival would make Shell an even bigger force in the global industry, given its scale to rival the likes of Exxon and Chevron. A merger would also likely certainly invite regulatory scrutiny considering the size of the deal.
Yeah.
So that would put them up there with the Exxons and Chevrons of the world, but I don't know if it's going to happen based on what the chief executive was saying. But this is still continuing to be floated because it's coming up in the earnings calls. It's coming up when they get stopped in hallways. People are consistently asking about this. Is this going to happen? And when I see it something like this consistently asked over and over and over again, it's being asked for a reason, Brandon. Somebody somewhere is mentioning that they're looking at this,
Well, BP doesn't look like it's doing too well. I'm just doing a quick research here. It looks like
which
they're
is why it's perfect for a takeover and
well,
why
earnings
Shell
per
would be good.
EPS growth over the past 12 years, negative 98.48%.
Yeah, they have not done well since that golf fiasco and all that oil that spilt in the Gulf and the movie that came out about it and everything. They have not done well since.
And the South Park episode.
And
I don't know
South
if you
Park
saw that or
episode.
not. We're
No.
sorry. We're so sorry. Uh,
But there, I mean, there you go. I mean, that's the state of the oil industry right now. Is OPEC is infighting. Shell's looking possibly to take over BP and
well,
really consolidate it even more, which is funny because the reason why we have Exxon and Conoco and Chevron and all these is because back in the day, the world's richest man in the 1970s, and there was a movie made about his nephew being kidnapped, and he really was like, didn't want to pay to get his nephew back. He was the world's richest man at the time. That company that he owned got split up, and that's where you have these companies of Exxon and Chevron are used to all be one.
yeah. Well,
And so
Shell and BP are both London-based companies. So I don't
yes,
know the situation that the government has with those kind of mergers and if they block them a lot. I don't know much about that. So I don't know if that's going to happen or not. Price to earnings ratio for BP right now is about 8%. So, like you said, right now with BP not doing so hot, they should actually get a discount on it.
yes, exactly, and that's why the rumors are even floating up even more right now.
Yeah.
Uh,
Interesting.
right?
I thought BP had recovered. I had no idea.
Yeah, still struggling.
Whew.
All right, let's move into the earnings calendar. You ready, Brandon?
Ready.
All right, here we go. This goes fast and heavy here. Monday. Monday. I don't really see much here. I mean, you got Tyson Foods. He could talk more about, chicken and eggs and what's going on there, but nothing here on Monday that I'm really calling out. Ford Motor Company that has to do with tariffs and imports. It'll be interesting to see what they have to say about it. Be curious to see if they're saying what's going to happen with their importing. Palantir, that's one that you said you've looked at buying. That's coming
I
out on
did buy it.
Monday.
I did buy it. I'm up 10% on it. But you know what the thing is it's not for people with shallow stomachs for this kind of stuff because the average price movement per day over the past 5 years for Palantir has been 5%.
Well, let's see what the
So
earnings say Monday morning. Tomorrow, it's actually
yeah,
after the bell. So Monday after the bell on Monday, you're going to find out Palantir's earnings and see if it was worth you buying it.
right. Well, I mean, even without earnings being up 10% right now, there'd still be a chance that by this time next week I'd be down 15-20% just because of how volatile it is. So
Moving into Tuesday, you got Marriott, which I want to. The reason I'm calling this out is I want to see what they have to say about the travel industry. If they see that there's going to be, if there's bookings are down, if there's less people, or is it domestic bookings? Is it international bookings? Were they down? Were they not down? You know what I mean? That's what I'm looking at on Tuesday. You have A&D's one of the big ones coming out on Tuesday. Get a look at them as far as chips and are they planning to move more manufacturing into the United States? Are they not? That's definitely something to look at there. Uh, I don't see too much else here on Tuesday. Again, there's just not a whole lot of the big names. Rivian Automotive we want to look at just because I don't see how they're still in business personally, but
I know me either.
their numbers are horrible quarter over quarter. But let's see. Let's give them some hope here. Wednesday is another company Brandon owns. Apparently, it's a big week for you, Brandon. Walt Disney reporting
Yeah.
before the bell on Wednesday. What are you looking to see on from Disney on Wednesday?
Hopefully that Snow White didn't have that big of an impact on the earnings because it was a terrible movie, supposedly.
Yeah,
Uh,
but the Thunderbolts are making up for it.
it is for this quarter. So I want to see what their if they keep their guidance, what their guidance for the rest of the year is based on the macroeconomic uncertainties. They don't get hit by tariffs. They don't. There's no effect to Disney for tariffs. What's hardly at all, at least. It's indirect. So it is all the sell off of Disney was all based on this could cause a recession, which could hurt
Gotcha.
Disney earnings.
Could
So
hurt Disney
yeah,
earnings.
yeah.
Gotcha. All right. Keep moving forward. We got Arm Holdings, another big chip company. I want to see what they have to say. Again, are they moving anything in? Are they not moving anything in? Do they even care? You know, do they even care about the United States and having to work with us in our economy? Are they what do they have to say basically? Zillow, and I want to see their real estate holdings. Are they continuing to buy up properties and rent them out because that's just going to hurt home buyers? And if the American family can't buy homes, then that really is going to have a big effect on the middle class, which has bigger economic trickle effects, right?
And by the
So
way, real estate was one of the sectors that was up last quarter. So that's
nice,
another factor for us to say that we're most likely not in recession.
right? And then Thursday, ConocoPhillips. So I was just sitting here talking about oil companies. ConocoPhillips reporting on Thursday. Definitely going to be interested to see what they have to say, given all the news. Like I laid it out for you, the infighting in OPEC, BP, Shell, what's going on there, what might they do, what might not they do. Coinbase, that's a company I own. They're coming out on Thursday. I want to see what they have to say about the crypto market. I know Brandon, you're not a huge fan of the crypto market, but I am. I want to see what they have to say and where they see the cryptocurrency going into the rest of the year and next year.
I'm I'm not negative on it. It's just that like I still don't understand it 100%. You know what I mean? And if I
Yeah.
can't understand it, I don't buy it kind of thing. But I do understand the reasons for it existing. I get that 100%, and it gets 100% of my support. I agree with the reasons for the crypto market existing. I just want to make it's hard for me to declare value on something like crypto. So,
Gotcha. One thing I'm looking at on Thursday after the bell is Affirm Holdings. They've had a lot of negative analyst reviews the past month. A lot of people have turned negative on Affirm, and I want to see if this is going to hold true. Everybody's expecting an actual loss for the quarter. We're going to see what they actually come out and say. I don't know. It'd be interesting. Let's see what they have to say and see what they say going forward. Moving into
I wonder if they'll bring up.
Friday.
Oh,
Go ahead.
sorry. I wonder if they'll bring up student loan debt because the 5 million people that just defaulted on student loans, I bet were all Affirm customers. That is essentially the demographic.
Yeah, probably. But that's it. That's my call outs for the earnings this week. Those are the ones I'm looking at. Brandon, final thoughts.
Buy Nvidia. I
Still
mean,
again?
I understand that we have limited. In fact, we've made illegal the shipment of the H20 or H20 or whatever they are chips to China. But the U.S. government's picking up a lot of that demand right now. I know they paid a $5 billion write-off for their investments in China also, so that hurts. But what other choice do you have right now for these artificial intelligence large language models and for chips right now? I mean, the wide moat on NVIDIA is so crazy. And the fact that chips are getting such a big amount of attention from both governments just means that they're so important and central to the world's operations. And almost all of them are designed by NVIDIA. So,
There you go. All right, I want to cover a couple things here for my final thought. Is first of all, Mo, if you didn't get into it in all these years I've been saying get into it, I would say pause. I'm not saying sell. It's a great company though. I'll just say I would pause right now. There's other ones, ARCC. They didn't have a stellar quarter. Everybody's saying that they're going to be in line with the market moving forward for the next rest of the year. I don't know. I think ARCC has good management in place, and they might outperform the market as far as like how they do. So that would be a dividend play. I would pause for Mo for right now. Solana, I know I talked about it last week. I just want to give you an update. It is flat week over week, a 1% move up and down throughout the week. It's continuing right around that range, even though Bitcoin had a good week overall in the crypto industry. So something to keep an eye on there with Solana. And also one last thing is someone I wanted to prove to a number of people that I still have it because a lot of people say, "Well, Dave, you've worked yourself up to a certain point and you don't know what it's like to start from zero again." So had my Robinhood account, Brandon, right? My Robinhood account had nothing in it. I was using it just for charts and quick views of charts if I wanted to look at something real quick. So I started putting $20 every week into it.
yeah, yeah.
It's or every other week into it to see what I can do. See what I can do, man. Currently, I am up in, and I started this 4 weeks ago. So in 4 weeks, with just $20 each, I'm currently up almost 5%. And I'm gonna move it again, and we're gonna see where I'm at in a year. But I bet you I'm gonna have this thing rocking and rolling here very
Yeah.
soon.
Guys, if you think it's difficult to invest $100, wait until you get to tens of thousands or higher.
Right?
It becomes
Yeah, I mean,
more and more difficult with time. So if
so,
Dave's able to handle a six-figure or seven-figure account or whatever it is you have, he could definitely handle $100. I'm telling you, it's a different scale. Once you get there, it's much more difficult.
and people are afraid to lose money with the more money they make, and I feel like that's the problem why they don't have those big returns as they accumulate more.
Yeah.
They become safer and they don't want to lose it. It becomes less about gaining and more about I just don't want to lose.
Yeah.
And I'm like, well, you lost your edge. You lost
Right.
your edge then, and you can't lose that edge if you just do your research and take your time and make sure what you're doing is correct. You're going to be just fine.
I can understand why some people, if they get to the point right now where they're like, I have enough money right now um in the broker, if they get to the point where they have enough money in their brokerage accounts to where they say, oh, I could retire right now and be just fine. I
Yeah,
get that. You only have to get rich once. Then after that, you're at the end, you're almost at the end of the game unless you want to keep going. But so I understand that, but like if you're not at that point, then you gotta keep chugging along.
and everybody's point
It's
is different,
Yeah, it is. I agree. Some people could live in a tiny house or a trailer and be just fine.
right? It's like the greed of Wall Street, and Wall Street money never sleeps. I love that when Shia LaBeouf's character looks at the Jamie Dimon type character played by Josh Brolin, and he asks him, he says, "Hey, what's your number? What's your number where you make enough that you can just walk away?" And Josh Brolin character looks at him, he says, "More." I was like, that was great write-in right
Yeah,
there. Great write-in.
yeah.
Anyways, yes, yes, there you go. All right, thanks for listening. Please hit the subscribe button. Tell your friends and family all about us. Share us all around. We appreciate it. We enjoy answering your questions and comments. As always, we hope that we have been entertaining, educational, and uplifting because we want everyone to make money. Have a good night.
Have a good night.